Hello traders, today is day 55 of the small cap market open test trading. I've written a plan specifically to trade small cap stocks with very specific screener criteria and chart criteria. Tells me exactly when to trade, when not to trade. There's absolutely no guesswork, no subjectivity. Everything is purely objective. And unfortunately, as you may or may not know, the small cap market has been pretty much dead for the past few months. And this does happen. There's kind of an ebb and flow to pretty much every sector of stocks, and right now we are at an ebb with the small cap stocks, and you can see that right here on my screener. So the screener criteria is pretty much 500,000 shares or more. That's at the open, so we're much later now. That's why there's so much more volume. And then I want to see 5% change or greater on the green side, obviously. But then there is some daily chart criteria, and if that daily chart criteria is not met, then it doesn't matter how far up they are, like MGNI did not meet the daily chart criteria. Same thing with quadruple U. So yeah, I mean, it's not uncommon when things are very active in the small cap screener to have 9 charts filled up with small caps. Let me show you my charts only page. So I'll have like 9 charts filled up with stocks and trying to decide which one looks best, which one is the one that meets my criteria most closely, and that's the one that I should focus on. Well, lately it's just been a bunch of nothing. So, but I did want to make a video today because I didn't release one Tuesday, even though I was looking for trades on Tuesday. So that's why I'm calling this, I believe, day number 55. There's no 54 video. I'll have to double check that, but I was looking for trades on Tuesday. It was just nothing, and I just decided not to make a video. But today's Thursday and tomorrow's Friday. I'm going to be looking for trades again tomorrow. We'll see what happens. I am in a trade with SPXL, which has absolutely nothing to do with the small cap screener. And this is just something I've been dabbling with. I do have a plan, but I don't have a tested strategy. I don't have statistics that I can go by. But basically what happened is, this is a ETF that follows the S&P 500, and we know that that's been selling off like crazy. We could look at the SPY here. That's basically the same thing, right, as SPXL, just not leveraged. And you could see how this thing just gapped down like crazy. So anytime this happens, there is a chance. It's not a guarantee by any means, but anytime this happens, there is a chance that things can pop back up and fill the gap and all of that. So I got in during the pre-market near the lows with just one single share, because this is a very kind of experimental trade. And if you're going to do anything that you have not tested with 100 trades or more, you definitely want to trade just one single share and no more than that, because or whatever you're willing to lose. And just assume you're going to lose. Don't think that, wow, this thing is a great setup and I'm guaranteed to win. Let me go all in. There's no way I can lose. You can always lose, even on the very best, highest probability setups. So here we are in SPXL. At this point, we can't lose because we're following the 5-minute chart. So if you watch my small cap trades, you know that I use the 1-minute chart for the small caps. Those are much more active, much more volatile. The ETFs, especially the S&P 500 ETFs, are not nearly as volatile. So the 5-minute chart, I find, is just a lot more better suited to follow these trades. So as I said, I entered this position in the pre-market. The ideal entry would have been, I guess at the open, would have been for the break of this 5-minute candle. So it would have been slightly lower than where my position is, about maybe 30 cents lower. And basically what I'm doing here is I'm following ABCD patterns, and I have a video on that if you're not sure what that means, up the chart. So the first ABCD pattern is right here, A, B, and there's C, and then D ends up being here. So so my original stop loss when I bought this thing in the pre-market was just below the low of the pre-market, and then once it's opened and started going higher, then I moved the stop up to the low of the day. And then once that first ABCD pattern formed, I moved my stop loss to the low of that point C. And that way I don't get chopped around during all these bottoming tails. And once the next ABCD pattern was formed, here's point A, point B, point C, and then D is right here. Then I moved, basically as a 5-minute candle makes a new high, I moved this stop loss from here to here. And that's where we're at right now. We're still waiting for the next point C to be formed. We don't know where that's going to be. So this is now A, this is B, and this could be C, but we're not sure because we might get another 5-minute candle to make a new low. The only way we'll know is once a 5-minute candle makes a new high above a previous candle and it's closed, like the candle is already formed, then we can move the stop loss up to the lowest low. So that's just a little kind of a side lesson about ways that you could manually trail your stop loss up. This is something that I like to do on these S&P 500 ETFs. You can't just buy in the pre-market or buy in at the open and do this every day and win the trades. You just don't know what the direction is going to be. Today we had a strong likelihood of a bounce back to the upside because of that huge gap down at the open. But again, that's not like a strategy that I have tested over 100 trades. It's not something that I would do with single stocks, individual stocks, or anything else. It's just a pretty safe bet with the S&P 500 ETFs. And again, just go in to every single trade knowing what you're going to lose and be okay with that, even if you hit the max loss. Like when we first started here, my stop loss was at 90.34 basically. So I was looking at maybe $1.25 per share loss, and I was totally okay with that if that happened at the open. And luckily the pattern has formed in such a way that we can't lose money on this trade at this point. And we'll see how far it goes. So anyway, just wanted to add that in. This has absolutely nothing to do with the small cap stocks, but just gives you some ideas maybe on how to trail ETFs with the 5-minute chart manually. So again, hopefully it was helpful to you. As always, go into every single trade with a plan and stick to that plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.